What is up, y'all? So, since I've promised you guys, damn, that was loud. Since I've promised you guys videos every day, I am not really in the mood to make a video, but I'm gonna fucking make a video. Okay, I'm going through some like existential crisis bullshit. I'm so fucking smart, dude. I'm seeing at the third eye, bruh. Nah, but I don't want to make this video, dude, at all. But I'm going to because my life moves on, whether or not I fucking have emotions. So here I am. Okay, enough talk about that. Today I want to talk to you guys about trends and liquidity sweeps. Basically, with what you guys have learned, this, just like every other video, this will just get easier and easier to learn. And through this playlist, I'll have videos where we put things together so you can use what you've learned and grasp it together yourself. So let's get to this, right? Trends and sweeps. So first off, what is a trend? A trend is a trend in price. So if price is trending upwards or if price is trending downwards, we'd like to see where that's going to be and why, how that's the case. So, for example, some of this is looks, but you really have to dive deep into how these things work so you can find trends even if they don't look like fucking trends. So, for example, what does this look like? An uptrend. Okay, it looks like an uptrend. Why? Because we have up candles. Looks like a fucking uptrend, right? What does this look like? A downtrend. Okay, this looks like a downtrend. Why? Because we have fucking down candles. It looks like a downtrend. Now, which one of these are actually an uptrend, and which one of these are actually a downtrend? They're both correct. And why is this? Why are they both correct? Just like we learned yesterday, break of structure, right? This trend is an uptrend because we have broke to the upside. This trend is a downside. Why? Because we have broke to the downside. Right? Okay, so now that we understand the basic of finding the trend, let's actually figure out how we can find the full trend. The full trend. Is all of this an uptrend? Is all of this an uptrend? No. No. All of this is not an uptrend. Overall, the trend is fucking pretty bullish. It's pretty damn bullish, right? On higher time frames, this would most likely be a very, very, very strong uptrend. For example, let's go to the 10-minute. We have no break of structure to the downside except here. Let's go to the 30-minute. Let's see if no trend break. It's a full, complete uptrend starting from right here. Okay? Starting from right here. Now, why does it start here? Because prior to that, we broke structure to the downside. So we had a downtrend, as you can see. Oh, come on. We broke structure right there. Okay. I don't have to mark these things out for you guys all the time. You guys are getting better. Break to the downside right there. Okay. And then we have a downtrend until we what? Break structure on this candle. Because, why? We have a up-down point. And guys, where is this? Right there. Exactly. So where does this trend start? Technically, it starts down here. Now, some would be like, well, if it broke structure and started right here, why isn't it there? Well, because that's when the bullish trend is validated. That's when the bullish trend is now certified, bro. This shit's certified when we break structure to the upside. But why does it start down here? Because now, since all of this is certified, so is this. Because none of this was downtrend, right? All of this was possibly part of this downtrend. But since we certified an uptrend up here, again, is there a break of structure in here to the downside? No. Okay. Would this be part of this trend? No. Why? Because in between this and the lowest point on this area, what do we have? We have a break of structure to the upside. So yes, we have an uptrend right there, but we then break to the downside right here. Okay, so the only uptrend from right here is until this point, because we break structure to a different trend right here. And then of course, where does they start? Yeah, so again, okay, the start of this trend was right there. We certified here. Even if we certified all the way up here, if there was no other trend in this area, this is part of that trend, right? So again, we have two bullish trends in this area. Why are they not together? Because this trend is different. Okay, if this price didn't come all the way down beneath this low, if it just came to right here, or if the wicks came all the way down here and we closed back up above this low, this will all still be the same uptrend. Okay, so now that we understand truly how trends work, let's find a few. Okay, and let's go to the 3 minute. I'd like to see just better price in this random time period. Okay, I'm going to pick a random area. Let's see what we can do. Okay, so random. Ready? Okay. Absolutely random, right? Let's find the first trend break. And I want you guys to do this. Starting from here, we currently have an uptrend. Why? Because we break structure, guys. We break structure right here. Okay? So if this is our, if this is our first trend break, because we originally were towards the downside from after this point, where is the next trend break in this box? I want you guys to find this for me right now. Pause the video. And what happens here? We come up, down, up. We still don't break under this low. Still don't. Okay, because we have a new low now. Okay, all the way down here. Still no, still no, still no, still no. It's still to the upside. We don't need new break of structures. We already are we are already broken to the upside, okay? Oh. Where's that next trend break, guys? Tell me. Look at this point, guys. What closed underneath the point? This candle. We look at the tick area right here. Are we below 25,696.75 when we close this candle? Fuck yeah, we are. So the new trend is down. Okay, until when? Oh, and this is nice. This is nice. This is really nice. Ready? Break of structure. What could this be? Okay, ready? 25,719.25. Yes. So ticks are moving. We are above it. We close above. It's not the best close, but still it's technically a close. So what do? We have broken structure to the upside. Simple. And you don't have to mark these things out eventually. These things come in your freaking mind. Where's the next break of structure? Tell me. Right down here. Not because of this candle, because the wicks didn't fucking close. The wicks is just past price. This candle closed underneath. Boom. So now we know how to find trends. Okay. Now I want you guys to learn how to use them in one way out of many ways. We'll get to the other ways in the future, but now this is a fun confluence. It's a little bit hard. These confluences, or this confluence, is called a liquidity sweep. Liquidity sweep. So these can happen on any time frame, just like everything I'm talking about, ever, frickin' forever. A sweep is going to be technically a very small point being swept, okay, and a very big point being swept. Now, choose carefully what confluences you use. We are going to use big sweeps, important sweeps, quality sweeps. So technically, you know, the very basic sweep could be a point. So this high, right? These two candles, up, down, getting swept. Okay? So price literally grabs price, closes over, or comes over. It doesn't have to close over. It doesn't have to close underneath. It just has to come over or underneath. And price will go the opposite way because it grabbed orders, usually after coming all the way up to grab or coming all the way down to grab, and it's going to move the opposite direction. Okay, so obviously this is a 1 minute little small point. Very much useless, doesn't matter. Price obviously did not move down. Maybe just a little bit, right? Just a tiny bit. Not enough to care. Okay. There's many points here that price eventually came down to grab. But fuck all of these small points. Look at the big picture. Out of all of these small points, where is the lowest point in this freaking area, right? In this area, where is the lowest point? Right here. What did price do? It grabbed those points, moved up. You could have, because since we've learned about break of structures, fair value gaps, look at this. We sweep, okay. These are filled fair value gaps. These are filled. This one isn't completely filled. Yeah, you know, it was filled before we touched this point, so later on I'll tell you why you wouldn't want to use that, but look. Freaking, oh, I'm blind, guys, and I'm teaching you trading. Why am I so blind? Okay, we come into this fair value gap and we sweep. Okay, we come up, close above it, and fuck, God knows if you wanted to wait this late in a trade, which I try teaching you guys not to wait this long. After we break structure to the upside, place your trade, just put your stops. Put your stops right here. Just target a 1-to-1 symbol, right? There we have it. It's a 3-minute trade, by the way. That's like a four candle trade. Obviously, we're on the 3-minute time frame. It's only a 12-minute trade, but dude, reaction. And this was during market open. I think this was today. I made this trade today. Yeah, not this exact setup, but dude, I made this. I caught the same movement a different way today. So there's a sweep. Now, basically, you can use any point as a sweep, but points that are bigger or better or on a higher time frame, okay, those are the points you want to look for. You want to quality trade. So I never look for points under the 1 hour and 15 minute unless they're a conglomerate of points. So first off, I'll show you what I mean by looking on the 1 hour for points. Okay. What is market going to do when we come up to this very strong 1 hour point? Well, we haven't touched it yet. This is going to be a little rebalance, and what's going to happen is, obviously, we're going to come back up, and then we're going to freaking probably, okay? We're going to grab a lot, and I mean a lot of orders, because it's a high time frame sweep. There are 121 minute candles in this point. Almost, okay? There's a lot of orders there. Let's just look at some past examples. And this just goes so far. Ready? We have a 1 hour sweep. It's a small one. They're close, but they're powerful because it's the 1 hour. Sweep. Come up. Go back down. Okay? Then we sweep what looks to be like... we have fucking equal lows. Holy shit. What? No, what? Sometimes you need obviously more than a sweep, okay? Yeah, so we swept these lows, barely going over. We kept going back down after we went up a little bit, but then we swept the rest of it. And then we went all the way back up, okay? And then, as we go up, what are we doing? We're sweeping. We're going past this high, this high. It looks like this high was just enough for price to consolidate and then eventually dip down, okay? And then we obviously did not come all the way down to this point right here. But, you know, eventually we did. Looks like we didn't give a fuck about it. Neither did we come all the way up to grab this point, okay? But we indeed did grab this point, okay? And apparently that was enough to just move down. All the way down. All the way. Into this big weekly opening gap. Now, guys, this is all confusing, and this takes time. You have 60 videos more to watch on this fucking trading shit. Okay, this is just a small confluence I need y'all to learn about. You do not need to know everything. Let's find a very, very, very fun example. You ready? For this, we have a bunch of stuff happening up here. We eventually come down here. Now, what do? We come down. Let's see what market may have done. Looks like we swept a conglomerate of 1 hour lows. The low that looks like price cared about was this one. What do? What do? We come back up. Now, this is the fun part too. This is super fun. When we come up, there's no, points right here. And there's a million reasons why we didn't keep going up and instead we went back down. Now, what did we do when we went down? Guys, it gets so perfect. Up, down, sweep again after a fucking retrace in equilibrium. Oh, can't get any better. Okay. 8 a.m. God, I think I made a trade last Thursday with this in this 8 a.m. candle because we were above a 1 hour fair value gap level. Ooh, my God. Look at all that. Easily target this high right here. Let's find a sweep to the downside. A big one. And sometimes these movements down aren't fully caused by sweeps. What happens here, guys? Price hits it. Okay. Moves down. What happens here? Price comes down, touches it, moves up. It's fucking not rocket science, y'all. This becomes this easy. This easy eventually. For your homework, I want you to find 3 trends that are bullish, 3 trends that are bearish. Tell me how they are trends, okay? Tell me how they are bullish or bearish trends, and find the starting point and ending point of those 6 trends. Then you guys, you have to do this homework. This homework is so important for your ability to learn this trading shit. Then I want you all to find 3 bullish liquidity sweeps and 3 bearish liquidity sweeps. So, a bullish sweep, okay? A bullish sweep is going to be a sweep that leads price to be bullish. For example, this one. Price grabs this low sell or this sell side liquidity or low or buy side liquidity. Okay, price comes down to this buy side liquidity and it moves up. That's a bullish liquidity sweep. A bearish liquidity sweep is buy side liquidity or sell side liquidity. Okay, sell side liquidity. Price what? Creates it, moves down, blah, 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 eventually comes up, grabbing it, moving price down accordingly. Moving price accordingly. Sell side liquidity. What's price going to do once we touch this sell side point? It's going to fucking sell. Same as why this price is going to buy, because there's buy side liquidity. Okay? Bearish fair or bearish liquidity sweep, bullish liquidity sweep. With that being said, you've learned a lot in this video and you're getting pretty damn close to understanding how to actually day trade. That being said, deuces, y'all. I'll see you in the next video. Peace.